recession's a real risk. You look at history. If you live in a world of high inflation and a Fed on the warpath, you invariably end up in recession. So that's not an unreasonable forecast, but it's an unlikely one.
How about that? So, well, listen, your optimism is
Well, it's relative
I hope
optimism, Joe. I
well
mean,
received
you're
in this
comparing
case.
me against some pretty bleak forecast. So
I
it's
am, of
hard to be
course,
more
I am.
optimistic
But a
than
lot
that.
of folks
Yeah.
think that a lot of folks have counted out the consumer, and you're not one of them, Mark. That's really what we're talking about here.
I mean, why? I mean, the consumer is like rock solid. I mean, real consumer spending growth, the whole shooting match, everything is 2% ish on the nose, which is like exactly what you want, right? That's enough to keep the
Hmm.
economy moving forward out of recession, but not so strong that it generates inflationary pressures. I mean, it's like, I couldn't draw it on a piece of paper better than it's happening now. And all the fundamentals look good. Jobs, unemployment,
Huh.
real wages are rising, a lot of excess saving. Debt service is low. Yeah, I mean, low income households are under pressure, no doubt about it. But middle income, high income
Hmm.
households, their balance sheets never been stronger. Stock prices are down, housing values are flat, but people are still a lot wealthier than they were when the pandemic hit just a few years ago. So I'm hard pressed. Why would the consumer pack it in unless something happened? Now things happen, right? There could be another shock, something we're not,
Sure.
we're not forecasting at this point. But so it's not again an unreasonable concern, but seems much more likely than not the consumer is going to hang in there.
Is the Fed done?
I think so. I hope so. I mean, I don't think they need to raise rates any further. I mean, inflation's sticking to script. It's coming right in, as the shocks from the pandemic and Russian war fade, they're increasing in the rearview mirror. There's inflation is moderating as you would expect, and it's going to take another 6, 12, 18 months to get it back to target. But I think that the interest rates where they are today is sufficient to accomplish that. So, and then as I said, Q4 growth is going to be soft for all the reasons that the piece, that you mentioned, put forward. So it is going to be soft. So I
Yeah.
think that'll be enough evidence. Inflation headed to target and a slow growing economy will be sufficient to forestall, further rate hikes. I do think the Fed has set us up for, much slower rate cuts when they start cutting late next year going
Mm-hmm.
into 2025. And that's one reason why long-term rates are up, over the last 3 weeks. But so I don't think they'll be cutting quickly, but I think they're probably ended. The rate hikes are over.
Yeah, the higher for longer story gets interesting here. You're banking on a cut by the end of the year, I presume. Mark, what does that mean for mortgage rates? Have they peaked?
Yeah, I think so. I mean, we're set what 7.7 on a 30-year fixed. That would be,
Mm-hmm.
consistent. Obviously with a 4.5% 10-year yield and a 300 basis point, 3 percentage point spread, which is very wide by historical standards for understandable reasons. So if I'm right about the Fed in growth, I think 10-year Treasury yields are probably close to a peak, and if they're at a peak, I think mortgage rates are at a peak. Again, I don't think rates are going to come in fast, so we're going to be higher rates for a longer here, which means we will see home sales were already dead in the water anyway. This run up in rates isn't going to do any more damage there, but it could and probably will result in some house price declines here. So been expecting that for quite some time. So do think we'll
Mm-hmm.
see some further weakness in housing. But hey, Joe, the housing market, the single family housing market, is the single most interest rate sensitive sector of the economy, bar none.
Yeah.
And it has held up pretty well. Surprisingly well. In fact, housing in aggregate, if you consider multifamily activity, has actually been effectively flat because the multifamily market's been
Hmm.
strong up to this point in time and offset the weakness in single family. So net housing has been basically neutral with respect to the economy. When if you're really going to go into recession, you'd expect housing to be sinking, housing in aggregate sinking into the black hole.
Right. Yeah.